Hello everyone. All right. So today's this video session is to discuss on how are you going or what you should do to solve your questions on published financial statement, right? So this is the example of published financial statement for the code of 4160. So somewhere is relevant to the 4320 and 270 and 210 somewhere. And then you are going to be provided with the trial balance, which consists of debit and credit, and then you have additional information, and then what's the question require you to prepare. So as we know, the questions require you to prepare the statement profit or loss, and then your statement of changes, financial position, and your notes. But in order to prepare the financial profit or loss, for the expenses, you have to show the lump sum figure, not the detail. So the detail must be shown in the working. Somewhere you need to have your working. So that's why I put working at the top, because we have to complete the working, which is consists of selling, admin, and finance, the main three element of finance expenses in the financial statement or in the business, and then to get the total to be posted to the profit or loss. So there in the statement of profit or loss and other comprehensive income consists of turnover, which is credit. Why? Because it is credit, because it's revenue increase your equity, and then you have your cost of sale. Cost of sale, actually we have many elements in it, but you can only provide in the publication statement is a lump sum figure here. So what we know, it says debit because it reduce equity to get the gross profit, but sometimes gross profit, it depends whether the turnover is greater or the credit is greater than cost of sale, then you get gross profit. If the cost of sale, which is debit, more than turnover, you're going to get debit balance known as a gross loss. It's depend on the figure that we have here, but I just put gross profit for the sake of format. And then I'm going to add with the other revenue. So other revenue must be credit, because that the nature for the revenue increase your equity. So, and then we have selling, distribution, and admin, which is the lump sum figure. It's a group of selling, distribution, where the details we can get it from our working in order to arrive at the profit from operation. Again, profit from operation doesn't mean you have to get profit. It can get loss, depend on the figure at above. And then you have to minus your finance cost, which is part of your expenses, and then plus your investment income. This is the common format in your publication. And then you have profit before tax. Before, you have to minus taxation is part of your expenses, and for the sake of taxation, normally the process is whereby the company will make some estimation, and then do straight away the payment to the inland revenue. Together with the document, the inland revenue will finalize how much is the amount, and the final amount normally included in the additional information. So you are going to get profit after tax, and you have to add other comprehensive income. For example, it's surplus in the PPE. Alright, so in order to get total comprehensive income. Next, once you're done, so this profit and the other comprehensive income must be posted to the statement of changes in equity. So statement of changes in equity, you are going to prepare one statement here, and then you have to put only the mandatory item normally account in the statement of changes, which is the ordinary share at the very left hand side, and at the end of the right hand side is a retained profit, and then you're going to slot in case you have furthermore of your changes in equity. So you in statement of changes in equity, you have to show the opening balance and closing balance and the movement of your equity. Alright, so that's what we mean by changes in equity. And then next, you have a statement of financial position, because once you're done of the share and capital, you are going to classify which one is a share capital and reserve, total them, post to the financial position under the net worth equity, which already have in the template here, share capital and reserve. Where are you going to get this figure? From the statement of changes in equity. And then we have statement of financial position, which consists of non-current asset. Normally we have three items, which is PP, the tangible, non-current asset, the intangible, and the investment. And then non-current asset must be debit, because that's rule. Asset must be debit. And we have current asset. I'm going to put trade receivable first, because I'm going to attach with allowance for impairment, and the other current asset will be follow suit afterwards. So in order to get total asset of non-current asset and current asset, so we have some figure must be debit balance here. So we just get ready, and then this item must be financed by first one is by the equity, which consists of share capital reserve, which already get figure from our statement of changes in equity. We are going to have non-current liability, so far just a few items, and then we have current liability quite long, so provide enough space for the current liability. So we are going to total the equity plus liability to get the credit balance, and the credit balance must be equal to the debit balance, right? But the PPE here, you have to only provide the lump sum figure, the summarized figure, where the detail must be included in your PPE. So must be listed in your PPE. So in the PPE, you have name of your asset, detail of each of your assets you own and then the company own. Then you must start with the opening balance for the cost of valuation. Why it is cost? Because maybe some of the asset you record at cost. Or why is valuation? Because some of the asset we may record at market price, right? So you have to show what happened to the opening balance until closing balance. Show any movement in case you purchase, in case you surplus, in case you disposal, in order to get the final balance of each of your asset. Alright. So next you have accumulated depreciation again. This tangible asset is subject to wear and tear. So accumulated depreciation must be credited. So you have to show also the movement with the from the opening balance until the closing balance, and then there's a further depreciation charge for the year. Put it under accumulated depreciation to get the closing balance. So you are going to get the closing balance of your cost of valuation minus the closing balance of your accumulated depreciation to get the carrying value. Once you total the carrying value to get the total amount, so this total amount will be posed to the non-current asset. Then you can complete your statement of financial position at the last part. Make sure it is balanced. So that's the first step we need to do, and this is the, I think, the most colorful and fast way to provide, to make sure our accounting prepared accurately. Thank you.